Aloha, I'm Stan Cox, Principal Broker and Strategist with SC Finance Strategies and Insurance Consultants, and author of the books on the tax-free cash growth warehouse strategy. In this video, I'm going to explain what the term cash value insurance refers to, and the differences between the types of insurance that are included as cash value insurance. First, the term cash value insurance refers to life insurance that has a cash value component and that accumulates cash value. It is only life insurance that actually includes this special feature, not auto insurance, not homeowners or renters insurance, not property and casualty, only life insurance. And not all life insurance is cash value insurance. Term life insurance has no cash value at all. There are three basic types of life insurance: term, universal, and whole life. With these three types, there are variations. As I said, term has no cash value, so it is never referred to as cash value insurance. There is a rider that you can buy for term policies that will return the premium you paid for the policy at the termination of the policy. That's called a return of premium rider. Brilliant, right? But at no time does a term policy actually accumulate cash value as a feature of the policy. So that leaves universal and whole life insurance. These types of policies are called cash value insurance. Universal life is a rather complex construct. Universal insurance is built on a term policy and has certain riders built into it, which contribute to some cash value accumulation. But universal insurance has several fees attached to it that over time can eat up the cash value that has been accumulated. And when that happens, the policies typically lapse or terminate. With both universal and whole life policies, there are variations. Universal policies may be guaranteed, indexed, or variable. Although the term guaranteed is a little misleading, it is guaranteed for life as long as the premiums are paid and are sufficient to cover the cost of insurance and all the associated fees. Unfortunately, the fees tend to increase over time, and that's why many universal policies lapse before the insured dies, leaving no death benefit to be paid to the beneficiaries. When a policy is indexed, that means the cash value component is tied to one of the stock market indexes, such as the S&P 500, or another one of the many indexes available. With that tie-in, the cash value has a chance to grow more than a simpler guaranteed policy does. But it is a chance, not a guarantee. And if the index performs poorly or loses money, the policy will not grow any cash value. When a policy is variable, that means that its cash value component is actually invested in the stock market, either in specific stocks or any number of various mutual funds, bonds, etc. In that case, it's possible that the policy will not only not grow in cash value, but it could actually lose money. So variable policies are definitely a risk. Now, whole life insurance is truly guaranteed and permanent, as long as the minimum premiums are paid. With most providers, though, whole life policies can be constructed or designed with options or riders, which can have a significant impact on the cash value accumulation without risking zero growth or worse, losses. With cash value insurance, you also may take policy loans without any penalties or taxation. And all the cash value growth is tax-free or deferred. So as your cash value grows tax-free, you can still use the money in the account without being taxed on it. And in some cases, there is a positive interest rate arbitrage. So you can actually have your cash value growing at a higher rate than what is being charged for the policy loan. The options for design to supercharge the cash value growth and the inherent safety and guarantees with whole life, along with the tax advantages and the continued compounding growth of cash value, even while policy loans are taken, are the reasons we love participating whole life for the unmatched finance strategy we call the tax-free cash growth warehouse. You really should take advantage of the free webinar and learn about this king of finance strategies. Just click the link in the description box below and watch the webinar now. And if you like what you learned in this video, please subscribe to this channel. Also, go ahead and post your comments and questions here. We're here to help, and we look forward to helping you. For now, aloha and mahalo for watching.